XRP spot ETFs might end up causing mass price appreciation far sooner than many people anticipated. In this video, we are going to break down some of the initial numbers we just received from major players like Franklin Templeton and Grayscale as they come online with their XRP ETFs. Many people are not yet prepared for the scale of these numbers and the impact they could have on the spot market for XRP. This video will explore how much XRP is being removed from circulation, as well as provide an update on the current price charts, giving a clear picture of the market's reaction. Yesterday, I discussed how XRP was ready for a bounce, and today we are going to take a closer look at the charts to see how the situation has evolved. As always, your support means a great deal, and I want to thank everyone who takes the time to like these videos and subscribe to the channel, because these two simple actions help this content reach a wider audience. For those looking for a reliable place to purchase XRP, check the description below for my recommended platform, which is consistently trustworthy. To start, I want to address an important point about the emotional side of holding XRP and investments in general. It is common to experience market fluctuations right before significant announcements, especially those capable of changing the game, such as the launch of XRP ETFs. Often, a predictable sell-off occurs just prior to these events. Earlier today, I shared a post noting my surprise at how many people fell for a shakeout before the XRP ETF launch, emphasizing that this reaction was entirely predictable. This is simply how cryptocurrency markets operate. Large players with substantial control over market movement are fully aware of the bullish sentiment surrounding these ETFs, and they often manipulate short-term price action to exploit investor emotions. A red day, panic, or temporary decline should never fundamentally alter your long-term conviction, because the true value of these assets will always prevail over temporary market manipulation. Now, focusing on the latest trading activity, earlier today we observed the first Monday close with some of the major players in the XRP ETF space. Currently, there are only 4 live XRP ETFs, including Canary and Bitwise, with the addition of Franklin Templeton and Grayscale, 2 of the largest institutional entities. On day 1 of these 4 funds being live, there were $85 million in inflows for XRP. This is an extraordinary figure, demonstrating substantial institutional demand for XRP. Major players like Fidelity and BlackRock have not yet launched their XRP ETFs, and it is highly likely that they are closely monitoring these developments, recognizing the massive inflows currently being absorbed by smaller operators. This early activity is a clear indication that anyone waiting on the sidelines risks missing one of the most significant opportunities in XRP history. To quantify the impact, if current inflow averages continue, which is realistically possible as more ETF issuers enter the market, we could see approximately $33 billion in inflows over the course of a year. This could result in 14 to 15 billion XRP being removed from the public market within the first year alone. These numbers illustrate the profound influence that spot XRP ETFs will have on market dynamics. Even with only 4 ETFs active, the demand already exceeds expectations, and the full potential will likely be realized as more ETFs, including Fidelity and BlackRock, enter the space. The potential for market impact is enormous, and projections using market cap calculators indicate that continued ETF inflows could drive XRP to unprecedented prices. Regarding the charts, XRP has shown a strong bounce since yesterday. It held critical support levels, resulting in a significant green candle. While the support held, resistance remains above current levels, and XRP must break through this resistance to confirm a sustained upward trend. Once this resistance is cleared, we can anticipate discussions about new all-time highs and prices previously unseen in XRP history. The recent reversal and bounce are a direct reflection of the underlying fundamentals beginning to manifest in market action. While short-term manipulation by institutional players may temporarily suppress prices, long-term fundamentals always assert themselves, and this is exactly what we are beginning to observe. Additionally, examining the XRP to Bitcoin price chart reveals a notable trend. XRP is forming a strong rounded bottom against Bitcoin, signaling that it is starting to significantly outperform Bitcoin. This challenges the narrative that Bitcoin is the safest or most profitable cryptocurrency to hold. Historical data indicates that purchasing XRP below certain levels has often been a better investment than holding Bitcoin. If XRP continues to outperform and achieves even modest gains, it could fundamentally alter the prevailing Bitcoin maximalist narrative, as XRP would be recognized as the best performing asset in the cryptocurrency market. The implications are substantial, particularly for investors evaluating the relative value and utility of XRP versus Bitcoin. In conclusion, the combination of spot XRP ETFs, substantial institutional inflows, and strong technical performance suggests that XRP is entering a period of significant market activity and potential price appreciation. The short-term manipulations are only temporary, and the long-term fundamentals, including institutional adoption and ETF inflows, will drive market behavior. The bounce-off support, coupled with the potential for breaking resistance and outperforming Bitcoin, presents a highly favorable environment for XRP holders. For those watching this market closely, this is an extraordinary moment, and remaining informed and strategically positioned is critical. XRP is poised for an era of accelerated growth and institutional recognition, and those invested now are at the forefront of one of the most compelling opportunities in cryptocurrency history.